Hello and welcome to Livewire Markets Fund in Focus. My name is Anna Dadich. Today I'm joined by Cameron Robertson from Platinum Asset Management. With a 20-year track record investing across Asia, we'll explore how the Platinum Asia strategy has evolved through changing market cycles and where Cameron is seeing the best opportunities in markets today. Welcome, Cameron. It's great to have you.
Great to be here.
So the Platinum Asia strategy has a track record spanning more than 2 decades. What has enabled it to have such longevity and remain successful over time, especially given it's such a volatile region?
It is. I mean, it's a good point. Platinum's kind of got a history with Asia that dates back to before the start of the firm. The founders had been going there and investing in the region. At their prior role at BT, they came to Platinum. And so it's sort of really been a part of the firm's culture from the start. Over the couple of decades that the strategy's been running, the fact that we've been involved in markets across the region gives us a much greater sense over time. You kind of build up an understanding of the entrepreneurs, the families, the interplay with regulators, governments, things like that, which really helps, I guess, give the confidence you need to sort of ride out some of these cycles that you sometimes get in less developed markets across the region and understand perhaps where you should be a little bit more cautious and where you can really take advantage of the opportunities that are presented.
Okay, so what's changed over this time with how you invest and position the fund? How have the macro conditions influenced how the fund has been managed in the past compared to the last couple of years?
I mean, over that time, the region's changed enormously. I mean, you think about China, India. While the underlying philosophy for investment hasn't particularly changed, the tools of the job has, and the opportunity set has changed enormously. You know, China's now absolutely the center of the world economy. It's referred to now as part of the G2. And so the breadth of opportunities in terms of industries and companies has really exploded across the region. You're also seeing some of the smaller markets, which perhaps were almost too small to offer much diversity of exposure, whether that's Indonesia, Malaysia, Thailand, Vietnam. They're starting to come into their own as well, with a lot of opportunities there as consumers are sort of getting wealthier and those economies are continuing to develop. So I'd say that that's probably been the biggest change when you look at it over the arc of the life of the strategy.
Yeah, the rise of the middle class in particular, yeah.
Absolutely, yeah.
So you've said in the past that Asia is a region of unending dynamism. What countries do you think show the most opportunity for investors right now? And does tech still reign supreme, or are other sectors showing more promise?
I mean, tech is really capturing the world's attention at the moment. And you do see, obviously, Asia plays into that in a big way, with Taiwan and Korea having very big tech ecosystems, hardware supply chains that feed into all your big US tech players. China's also got some big tech companies. But the region is much broader than just that tech opportunity. If you look at the portfolio today, you know, we've been finding opportunities quite broadly across the region. China remains a pretty attractive opportunity. It's been out of favor. They've had a tough run with, you know, the downturn post their property crisis. A lot of the domestic economy's been a bit weaker, margins are depressed, demand's been a bit softer for domestic facing companies, and investors haven't been that interested in the region more broadly and in China in particular. Similarly, you've seen that spill across into Southeast Asia. So countries like Vietnam, Indonesia, they're really standing out as great opportunities to us.
How is your fund currently positioned, and can you highlight a couple of your top holdings?
Yeah, so as I mentioned, we are pretty fully invested at the moment. We're excited about the opportunities we're seeing across the region. Stock markets have done well, but actually, you know, that's come off a very low base, and it's been somewhat narrow in terms of those tech companies that we mentioned. They've done incredibly well. There are still heaps of opportunities across the region where you're not having to pay much for it. So as of today, we're 96% invested, quite fully invested. We don't have any shorts on at the moment. We do have the ability to, but right now we see the opportunity to be long. Markets are cheap, and you know, economies are coming off the bottom. So there's a lot of opportunity. In terms of examples of where we're positioned, won't come as any surprise. Like I said, China's a big opportunity, so we've got close to half the fund there. We've also got, while not massive in the portfolio context, reasonable sized bets on smaller countries like Indonesia and Vietnam, where we've got close to sort of 6-7% positions in each of those across a handful of companies. So to give you a sense of specific examples, there's companies like Astra International. They're the biggest automotive player in the Indonesian market. They've got a bit over 50% market share. So for most of your audience, I think they'll be sitting in Australia. In Australia, we sell over 1.2 million cars a year. In Indonesia, a population 10 times the size, they're only selling about 800,000. So we sell 50% more cars for a population 1/10 the size.
Why is that?
It's just
it
the
the
nature
cost
of,
or-
it's the
yeah.
nature of the economic development. So
Yeah.
GDP per capita is around $4,000 in Indonesia. As you go from that $4,000 to $10,000 level, we expect that actually the size of that industry could grow 6-fold or 8-fold. And so you're only having to pay 8 times earnings at the moment for a company like Astra. So you're really not having to pay because markets have been so focused on US. People just haven't been looking at what's across Asia.
Yeah. Well, it's interesting you said markets are cheap. I haven't heard someone say that for a while. Okay, so what kind of investor does this fund suit, and why should they consider adding it to their portfolio?
I think for most people, when they look at their portfolio, they'll probably find that it's very heavily skewed to US. Makes sense. Markets in the US have done very well. People have ended up chasing performance there and even just naturally letting that position grow. But when you look at your portfolio today, I think for most people, they probably recognise that they've got quite a lot of concentration into that market, and perhaps even quite specifically into sort of tech sectors. Asia's a great way to diversify that exposure. Like we spoke about, it's more than half of the world's global population. It is today the beating heart of the world's economy. 50% of the global economy sits in Asia. And I think most people, when they look at their own portfolios, they'll find, well, that's just not expressed. They're not capturing that opportunity. And so I think it's a great opportunity for people to diversify without having to give up on returns. There's a lot of opportunities across Asia. There's great entrepreneurs, there's emerging industries, and it's a good chance to tap into that and diversify your exposures.
What are the key risks and how do you manage them?
They are, in many cases, less developed markets, whether that's regulatory structures, government structures, corporate governance can be a little bit patchier. And so that's really the value of having experienced fund manager, a team who knows the region, knows the companies, knows the founders and the families behind them. Our job is essentially to try and navigate those risks, understand who are the people that you can trust to invest your money with, build a portfolio out of the opportunities and try and dodge the minefields that can be present in some of those emerging markets where you don't necessarily have the same legal protections that you're expecting to as an investor in a developed market like Australia.
Yeah. So would you say like corporate governance is probably the biggest kind of risk that...
Corporate governance is huge. At the portfolio level, obviously, we also look at it. You've got to make sure that you've got a diversified portfolio of risks by country, by sector, by company. So you look at all that. We do have the ability to manage currency risk as well as market risk with shorting, like I mentioned before. So we've got a lot of tools there, and essentially that's our job, to take the opportunity set and put that together in a nice sort of package to deliver the clients a great outcome.
Yeah, sure. Okay, so final question. How can people access the fund and get more information?
So the Asia strategy, there's 2 main ways to access that. It's a managed fund. You can invest directly via the Platinum website, or there is an ETF. So the PAXX that's traded on the ASX, if you put money in there, that's a feeder fund into the Asia strategy.
Okay, awesome. Thanks, Cameron, for joining us on Livewire today.
Thank you.
If you enjoyed that interview, give it a like and don't forget to subscribe to our YouTube channel. We release new content every week.